Hello and welcome everyone to Gold Asset of the Day for the 1st of December 2021, presented by myself, Phil Carr, at the Gold and Silver Club. So what have we seen here right at the end of the month, end of November? Well, of course, we have seen that sell-off to the downside. We've talked you through on many occasions recently to expect this at the end of the month with that usual outflows that you get, profit taking right at the end of November. Not only that, of course, we have the new COVID variant providing this risk-off environment. We've seen contract settlement over the last few days, the Black Friday sell-off that we talked you through in a lot of detail previously, everything essentially we discussed with you to happen from the middle of November for the metals to tank has played out. Of course, gold now is well below 1,800 US dollars per ounce, as we talked you through on the previous Gold Asset of the Day. Don't expect the prices to hold much above 1,860 US dollars per ounce. We're looking for a rug pull, which is exactly what we have seen. So gold prices have now fallen over 1,000 points from the recent swing highs around the 1875 level, all the way down to 1,769 US dollars per ounce. Now, in terms of levels that I would look at now as we transition into a new month, bear in mind, once you move into the 1st of December here, we are likely to see fresh inflows, fresh capital come back into the market. This is where you can see that bounce to the upside. I'm looking at gold support right now to be residing around that 1760, 1770 level, and then back up to resistance, 1800s to 1810 in the short term. Remember, this week we also have Friday's non-farm payroll data. That can provide certainly some big volatility in the market. Then we're going to be transitioning into the FOMC statement and the European Central Bank into December, which again can just provide some fantastic opportunities to really capitalize on those fast moves in the market. Now, for the week, we've seen gold prices, they're down over 1.5%. As we mentioned to you previously, we're expecting this pressure to the downside. We capitalized on that massively in the previous week. We banked many energy positions alongside metal trades, over 3,000 points banked. So of course, for every one lot contract that you'll be trading, that's $30,000 of profit. For every 10 lot contract that you'll be trading, that's $30,000 of profit. Now, in terms of hedge funds and money managers, their positions in the last week, we have seen a 5% reduction in the net long position with gold, which takes it back down to 76% of hedge funds that have a position on gold right now are currently long. So we've seen again a 5% trim in the last week. That's to be expected though. Once you get into Thanksgiving, Black Friday, contract settlement, end of month profit taking, new COVID variant, expect this risk off environment, outflows from the metals, everything that we've been talking you through, not to FOMO. Do not end up buying gold with delayed confirmations. We've seen too many technical analysts out there get ultra bullish on the metals, suggesting that the low was in, that it was time to be buying the metals just before there was the rug pull that we talked you through in detail. So if you've been watching our reports, no doubt you've been on the right side of this. You haven't been tricked by all these delayed confirmation. Technical analysis, as you know, does not work. You're guaranteed to get chopped up in these markets. It's death by 1,000 cuts if you only trade using technical analysis and you're using outdated gimmicky indicators. We definitely don't want that for you. There's a massive opportunity between now and the end of the year to really finish the year on a strong note and on a high here and hit the ground running as we go into 2022. What you want to be utilizing, of course, is that research-driven approach to the market where you are using statistics, market intelligence data, understanding the daily, the weekly, the monthly, the quarterly cycles in the market, the intermarket correlations, the ratios of the market, key areas of liquidity, capital flows, extremely important. Alongside that, learn the major news items which will have the biggest impact, creating those big impulse moves for the metals where you can capitalize extremely fast on volatility, and of course understand fundamentals and the macroeconomic environment. That will help you massively. And then lastly, of course, understand and learn how the hedge funds, money managers and banks and institutions are positioned in the market. That will help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the research-driven approach to the market and join our professional mentorship program, there is an opportunity for you to do so. Just make sure you click in the link below today's report in order to make an application to join our professional mentorship program.